Anticipated 50% adoption increase in blockchain by 2025, impact on gaming, DeFi and supply chain sectors by Q2 2028. Overview. On February 2, 2025, projections emerged indicating a significant 50% increase in blockchain adoption by the end of the year. This anticipated growth is expected to revolutionize various sectors, particularly gaming, decentralized finance, DeFi and supply chains, with transformative effects projected by Q2 2028. This surge in adoption occurs amid fierce global competition from established blockchain platforms such as Ethereum and Avalanche. This report synthesizes key trends, predictions, and the evolving landscape of blockchain technology, providing a comprehensive overview of its anticipated impacts across critical sectors. Key trends and predictions. 1. Gaming sector transformation. The gaming industry is poised for a monumental shift due to the growing influence of blockchain technology. By 2025, the number of monthly active users in Web3 gaming is expected to exceed 50 million. This growth is fueled by substantial venture capital investments, which amounted to over $4 billion in 2022. Traditional gaming companies are likely to integrate blockchain to enhance user experiences, allowing for new monetization models and deeper user engagement. The era of play-to-earn models and NFT-based gaming is set to redefine how games are developed and monetized, creating a more interactive and lucrative environment for both developers and players. 2. Evolution of decentralized finance, DeFi. The DeFi sector is experiencing a paradigm shift as traditional financial institutions begin to embrace decentralized models. Many institutions are exploring the integration of DeFi protocols into their existing technology stacks. This shift is expected to increase demand for tokenized assets, including equities and fixed income products, fundamentally transforming asset ownership and trading practices. Enhanced liquidity and accessibility will likely redefine the financial landscape, making it more inclusive and efficient. 3. Innovations in supply chains. Blockchain technology is projected to significantly enhance transparency and efficiency within supply chains. By leveraging decentralized technologies, companies can track goods in real time, reduce costs, and improve accountability. The trend toward decentralized physical infrastructure networks (DePIN) is anticipated to gain traction as legacy systems evolve to adopt blockchain capabilities. This transformation will facilitate better inventory management, fraud prevention, and compliance tracking, ultimately enhancing overall supply chain resilience. 4. Technological advancements. The barriers to launching blockchain projects are diminishing, enabling more entities to create custom Layer 1 blockchains easily. Digital wallets are evolving into multipurpose hubs that facilitate a range of on-chain interactions beyond simple asset storage. Innovations in stablecoins and AI-driven blockchain solutions are expected to expand the utility of blockchain technology, enhancing user engagement and promoting broader adoption. 5. Shifting regulatory landscape. The repeal of the SEC's SAB 121 is anticipated in 2025, leading to more favorable conditions for digital asset custodians. This evolving regulatory framework will shape institutional interactions with blockchain technologies, potentially accelerating mainstream adoption. As regulatory clarity improves, more institutions may feel empowered to explore blockchain applications, driving further innovation and investment in the sector. 6. Cultural shifts and new partnerships. As blockchain technology becomes more integrated into various industries, partnerships between sports teams and blockchain firms are expected to rise. These collaborations will focus on enhancing fan engagement through loyalty programs and digital tokens. The growing acceptance of digital assets in everyday experiences signifies a cultural shift towards embracing blockchain technology as a mainstream component of consumer engagement. Differentiating factors. While the transformative potential of blockchain is widely recognized, different forecasts emphasize varying sectors. For example, Predictions from Avalabs highlight the gaming sector's rapid growth and funding dynamics, while others focus more on supply chain efficiencies. There is also a divergence in expectations regarding the pace of regulatory evolution, which could impact how quickly institutions adapt to the changing landscape. Timeline of events: 2022, over $4 billion invested in Web3 gaming, indicating robust growth potential. 2024, predictions solidify around the convergence of AI and blockchain technologies. 2025, expected 50% increase in blockchain adoption with significant advancements in gaming and DeFi. Anticipated regulatory changes, including the repeal of SAB 121, may facilitate further adoption. Q2 2028, the culmination of these trends is expected to redefine the operational landscape of gaming, DeFi, and supply chains amid increasing competition from platforms like Ethereum and Avalanche. Conclusion: in summary, the anticipated rise in blockchain adoption by 2025 is set to reshape multiple sectors by 2028, driven by technological advancements, evolving regulatory landscapes, and an increasing focus on user experience and utility. The gaming, DeFi, and supply chain sectors are expected to experience profound transformations that will redefine user interactions, investment strategies, and operational efficiencies. As competition intensifies among blockchain platforms, the implications for businesses and consumers alike are significant, marking a new era in the digital economy. This report outlines the expected trajectory of blockchain adoption and its far-reaching impacts across key sectors, emphasizing the importance of staying informed and agile in this rapidly evolving landscape. The anticipated 50% increase in blockchain adoption in 2025 is expected to produce transformative effects in various sectors, especially gaming, decentralized finance, DeFi, and supply chains by Q2 2028. This forecast emerges amid significant competition from established platforms like Ethereum and Avalanche. Key trends and predictions. 1. Gaming sector. The rise of Web3 gaming is projected to attract over 50 million monthly active users by 2025. Fueled by more than $4 billion in investments in 2022. This influx of capital is paving the way for innovative game development and new monetization strategies that incorporate blockchain technology. Traditional gaming companies are likely to adopt these technologies to enhance user engagement, create new revenue streams, and reshape the gaming experience. 2. Decentralized finance, DeFi. Financial institutions are increasingly investigating decentralized models, with some planning to directly integrate DeFi protocols into their existing technology frameworks. As traditional finance increasingly incorporates blockchain technology, the demand for tokenized assets, such as equities and fixed income products, is expected to rise. This shift could redefine asset ownership and trading practices, enabling enhanced liquidity and accessibility. 3. Supply chain innovations. The integration of blockchain technology into supply chains is expected to significantly enhance transparency and efficiency. Companies are likely to utilize decentralized technologies for tracking goods, streamlining costs, and improving accountability. The momentum toward decentralized physical infrastructure networks will likely accelerate as traditional systems adapt to blockchain functionalities. 4. Technological developments. The barriers to launching blockchain projects are diminishing, allowing entities to create custom Layer 1 blockchains easily. Digital wallets are also evolving into multipurpose hubs that facilitate a multitude of on-chain interactions beyond merely storing assets. Innovations in stablecoins and AI-driven blockchain solutions will further broaden utility and user engagement. 5. Regulatory landscape. The anticipated repeal of the SEC's SAB 121 in 2025 could create more favorable conditions for digital asset custodians. The evolving regulatory framework will influence how institutions engage with blockchain technologies, potentially accelerating mainstream adoption. 6. Cultural shifts. As blockchain technology becomes increasingly integrated across various industries, Partnerships between sports teams and blockchain firms for fan engagement and loyalty programs are expected to rise. This trend signifies a growing acceptance of digital assets and tokens in everyday experiences. Counterintuitive insights. Gaming versus financial sector growth. While many discussions emphasize the potential of DeFi and financial applications of blockchain, the explosive growth in the gaming sector is often understated. The rapid adoption of gaming technologies could outpace financial innovations, highlighting that consumer engagement in gaming can lead to broader acceptance of blockchain technologies in the general populace. Regulatory changes. There is a common perception that regulatory hurdles will slow down the adoption of blockchain technologies. However, the expected repeal of SAB 121 suggests that regulatory adjustments might actually catalyze growth rather than hinder it. This could encourage institutions to embrace blockchain solutions more vigorously. Multipurpose wallets. The idea that digital wallets will become multipurpose hubs contradicts the traditional view of wallets as merely storage solutions. This shift indicates that user experience and functionality will drive adoption, suggesting that the development of blockchain applications is not solely about financial transactions but also about enhancing user engagement and accessibility. Cultural integration. The increasing partnerships between blockchain firms and sports organizations might seem like a niche application but could indicate a broader cultural shift towards digital assets becoming mainstream. This counterintuitively suggests that engagement in gaming and sports might be just as crucial for blockchain's acceptance as traditional finance applications. Timeline of events. 2022, more than $4 billion invested in Web3 gaming, setting the groundwork for future growth. 2024, predictions around the convergence of AI and blockchain technologies solidify. 2025, a 50% increase in blockchain adoption is expected with significant advancements in gaming and DeFi. Notable regulatory changes including the repeal of SAB 121 may facilitate further adoption. Q2 2028, the culmination of these trends is expected to redefine the operational landscape of gaming DeFi and supply chains amid intensifying competition from platforms like Ethereum and Avalanche. Differentiating factors. While there is consensus on blockchain's transformative potential, sources differ significantly in their emphasis on specific sectors. For instance, predictions from Ava Labs place stronger emphasis on the gaming sector, focusing on user engagement and funding dynamics. In contrast, discussions surrounding supply chain efficiencies highlight the applicability of decentralized technologies in operational contexts. Regarding regulatory evolution, some sources anticipate a quicker adaptation by institutions than others, suggesting a divergence in the pace at which entities can respond to the changing landscape. Conclusion. The projected rise in blockchain adoption is poised to reshape various sectors by 2028, driven by technological advancements, evolving regulatory landscapes, and a renewed focus on user experience and utility. The interplay between gaming, DeFi, and supply chain innovations is indicative of a broader cultural shift towards the acceptance of blockchain technologies across diverse industries. As competition among platforms intensifies, the emphasis on transformative applications will likely accelerate the pace of adoption and innovation in the coming years. The report outlines significant trends expected in blockchain adoption over the next few years, notably a 50% increase anticipated in 2025. This surge is projected to impact multiple sectors, including gaming, decentralized finance, DeFi, and supply chains, ultimately culminating in transformative changes by Q2 2028. Here are some critical insights from the report that may be overlooked but are significant for stakeholders and industry observers. 1. The gaming sector's evolution. While many recognize the impact of blockchain on gaming, the specificity of the projected growth in monthly active users (MAUs) to over 50 million by 2025 is often underappreciated. This number not only reflects the growth potential but also indicates a shift in game development paradigms. Traditional gaming companies are expected to integrate blockchain technologies to enhance user engagement and monetization strategies. This evolution is crucial as it signifies a move from conventional models to more decentralized player-centric ecosystems where players can own, trade, and leverage in-game assets across different platforms. 2. DeFi's institutional adoption. The report suggests that institutions are increasingly exploring decentralized models, a trend that is often dismissed as being limited to retail investors. The integration of DeFi protocols into traditional financial systems is significant as it highlights a paradigm shift in how financial services are delivered. The anticipated rise in tokenized assets such as equities and fixed income products suggests a redefinition of asset ownership and trading practices. This change could democratize access to investment opportunities, enhance liquidity, and reduce transaction costs, all of which are pivotal for the evolution of global finance. 3. Supply chain transparency. The report emphasizes the potential for blockchain to enhance supply chain transparency and efficiency, a point that might not receive the attention it deserves. The ability to track goods seamlessly through decentralized technologies could revolutionize how products are sourced, manufactured, and delivered. The implications for accountability, especially in industries facing scrutiny over ethical practices and sustainability, are profound. Companies leveraging blockchain for supply chain management could significantly reduce risks associated with fraud and mismanagement, thus fostering consumer trust and brand loyalty. 4. The impact of regulatory changes. The expected repeal of SEC's SAB 121 in 2025 is a critical regulatory development that could significantly affect the digital asset custodianship landscape. Many overlook how regulatory frameworks can either hinder or accelerate innovation in blockchain technology. A more favorable regulatory environment could lead to increased institutional participation, shaping how digital assets are managed and integrated into financial systems. This shift could open doors for broader blockchain adoption across various sectors, including finance, gaming, and supply chains. 5. Cultural shifts in fan engagement. The anticipated rise in partnerships between sports teams and blockchain firms for fan engagement initiatives signifies a cultural shift towards digital assets. This trend may appear trivial at first glance, but it underscores a broader acceptance of blockchain technology in everyday experiences. These partnerships could lead to innovative loyalty programs and enhance fan experiences, indicating that blockchain is becoming embedded in popular culture. This integration could influence younger demographics who are digital savvy and more inclined to engage with brands that utilize cutting-edge technologies. 6. Multi-purpose digital wallets. The evolution of digital wallets into multi-purpose hubs represents a significant shift in user interaction with blockchain technology. Many individuals still view wallets merely as storage solutions for cryptocurrencies. However, as wallets evolve to facilitate various on-chain interactions, they will play a crucial role in enhancing user accessibility and engagement. This evolution could lead to a more seamless experience for users, encouraging broader adoption and interaction with multiple blockchain applications. 7. The convergence of AI and blockchain. The anticipated convergence of AI and blockchain technology has profound implications that are often underestimated. As both fields evolve, their intersection could lead to enhanced decision-making capabilities, improved data integrity, and innovative applications across various industries. This synergy could unlock new possibilities for smart contracts and decentralized applications, making them more efficient and user-friendly. The exploration of AI-driven blockchain solutions could redefine operational efficiencies and user experiences in sectors ranging from finance to healthcare. 8. The rise of decentralized physical infrastructure networks DeFi. The mention of decentralized physical infrastructure networks DeFi as a growing trend in telecommunications is crucial yet often overlooked. This innovation could transform how physical infrastructure is managed and owned, particularly in areas with low connectivity. By leveraging blockchain for decentralized infrastructure, Companies can reduce capital expenditure and enhance network effects. This development could lead to more robust and resilient communication networks, particularly vital in remote areas or during crises. Conclusion: the anticipated 50% increase in blockchain adoption by 2025 is set to redefine the operational landscape across gaming, DeFi, and supply chains by 2028. Key insights like the institutional adoption of DeFi, the evolution of digital wallets, regulatory impacts, and the integration of AI highlight a complex interplay of technological, economic, and cultural shifts. Stakeholders should closely monitor these trends, as they not only represent opportunities for innovation but also potential challenges that could reshape industry dynamics in the coming years. The significance of these developments lies in their ability to drive mainstream adoption and integration of blockchain technology into everyday life, marking a pivotal moment in the evolution of digital ecosystems. The anticipated 50% increase in blockchain adoption by 2025 is poised to instigate significant transformations across several sectors, particularly gaming, decentralized finance, DeFi, and supply chains by Q2 2028. This surge occurs amidst escalating competition from established platforms like Ethereum and Avalanche. Here are the 4 most valuable points for in-depth analysis and discussion. 1. Transformative effects on the gaming sector. The gaming sector is set to experience a revolutionary shift due to blockchain adoption. Projections suggest that Web3 gaming could attract over 50 million monthly active users by 2025. This growth is underpinned by substantial investments, over $4 billion in 2022, indicating a robust trajectory for game development. Traditional gaming companies are likely to integrate blockchain technology, enhancing user engagement and diversifying monetization strategies. The implications of this shift are profound. User ownership and engagement. Blockchain allows players to truly own in-game assets, which can be traded or sold outside the game environment, creating a more engaging and rewarding experience. New revenue models. Game developers can explore innovative monetization strategies such as play-to-earn models, which can incentivize user participation and loyalty. Cross-game interoperability. The ability to use assets across different games could foster a more cohesive gaming ecosystem, enhancing player engagement and potentially leading to a larger gaming community. 2. Evolution of decentralized finance, DeFi. The DeFi sector is on the cusp of mainstream adoption, with institutions increasingly exploring decentralized models. This transition is likely to redefine asset ownership and trading practices. Key developments to consider include integration of DeFi protocols. Institutions are not only investing in digital assets but are also looking to integrate DeFi protocols into their existing tech stacks. This could lead to a more streamlined and efficient financial ecosystem. Tokenization of assets. The demand for tokenized assets, including equities and fixed income products, is expected to rise significantly. This shift will enhance liquidity and accessibility, allowing for more dynamic trading environments. Regulatory considerations. As the regulatory landscape evolves, institutions will need to navigate compliance while embracing the benefits of DeFi, which could accelerate the mainstream adoption of blockchain technologies. 3. Supply chain innovations through blockchain. The anticipated rise in blockchain adoption is set to revolutionize supply chain management. The key benefits include enhanced transparency and traceability. Blockchain technology can significantly improve the tracking of goods from origin to destination, fostering greater accountability and reducing fraud. Cost reductions. By streamlining processes and reducing reliance on intermediaries, companies can achieve significant cost savings. Decentralized physical infrastructure networks. The shift towards decentralized infrastructure could enable more efficient logistics and operations, particularly in regions with less reliable legacy systems. The integration of blockchain and supply chains not only enhances operational efficiency but also promotes sustainability and ethical practices by providing verifiable information about sourcing and production. 4. Technological developments and cultural shifts. Technological advancements are lowering the barriers to blockchain project launches, which is crucial for widespread adoption. The development of user-friendly platforms for creating custom Layer 1 blockchains is a significant trend to monitor. Additionally, digital wallets are evolving into multipurpose hubs, enabling various on-chain interactions beyond mere asset storage. Cultural shifts are also noteworthy, particularly in the realms of sports and entertainment, where partnerships between sports teams and blockchain firms are on the rise. These collaborations signify a growing acceptance of digital assets and tokens in everyday experiences, fostering community engagement and loyalty. In summary, the anticipated rise in blockchain adoption by 2025 is set to reshape the gaming, DeFi, and supply chain sectors, profoundly driven by technological innovations, evolving regulatory frameworks, and cultural shifts towards digital assets. The next few years will be critical in defining how these sectors adapt and thrive in an increasingly interconnected digital economy. 1. The introduction of the Internet. The rise of the Internet in the 1990s and early 2000s transformed multiple sectors, including communication, commerce, and entertainment. The shift from dial-up connections to broadband and the development of web technologies led to the creation of e-commerce platforms, social media, and online gaming. Companies like Amazon and eBay emerged, disrupting traditional retail, while platforms such as AOL and Yahoo changed how people accessed information and communicated. This profound change reshaped global economies and personal interactions, much like how blockchain technology is poised to impact sectors today. 2. The Industrial Revolution. The Industrial Revolution in the late 18th to early 19th centuries marked a significant turning point in history, as it transitioned societies from agrarian economies to industrialized ones. Innovations such as the steam engine, textile machinery, and iron production led to mass production and the establishment of factories. This revolution transformed not only manufacturing but also transportation, urbanization, and labor dynamics. The changes were so profound that they affected social structures and economic models, similar to how blockchain adoption is expected to redefine industries like gaming, DeFi, and supply chains. 3. The Gold Rush. The California Gold Rush of 1849 is another historical case of rapid adoption and transformation driven by a new technology, specifically the discovery of gold and its implications for wealth and economic opportunity. The rush led to a massive influx of people into California, spurring significant developments in infrastructure, commerce, and local governance. Just as the gold rush created new economic opportunities in communities centered around mining, the anticipated blockchain adoption could similarly create new markets, business models, and communities focused on decentralized finance, gaming, and supply chain logistics. The anticipated 50% increase in blockchain adoption by 2025 is poised to significantly transform the gaming, decentralized finance, DeFi, and supply chain sectors by Q2 2028. This evolution is set against fierce competition from established platforms like Ethereum and Avalanche. Below are the key predictions and trends that outline the future of these sectors. 1. Gaming sector transformation. The gaming industry is expected to experience explosive growth, with Web3 gaming projected to attract over 50 million monthly active users (MAUs) by 2025. This increase is driven by substantial investments amounting to over $4 billion in 2022, which have laid the groundwork for innovative game development. Traditional gaming companies will likely adopt blockchain technology to enhance user engagement, allowing for greater interactivity and new monetization avenues, such as play-to-earn models and in-game asset ownership. 2. Decentralized finance, DeFi innovations. DeFi will continue to gain traction among institutions, with many exploring the incorporation of decentralized models into their existing frameworks. The demand for tokenized assets, including equities and fixed income products, is expected to rise, fundamentally altering asset ownership and trading practices. This shift will enhance liquidity and accessibility, making it easier for users to trade and invest in various assets through decentralized platforms. 3. Supply chain efficiency. Blockchain's integration into supply chains is anticipated to yield significant improvements in transparency and efficiency. Companies will increasingly utilize decentralized technologies to track goods and enhance accountability. The rise of decentralized physical infrastructure networks will facilitate the adaptation of legacy systems, leading to reduced costs and improved operational capabilities. 4. Advancements in technology. As the barriers to launching blockchain projects diminish, entities will find it easier to create custom Layer 1 blockchains. Digital wallets are evolving into multifunctional hubs, enabling a broader range of on-chain interactions beyond simple asset storage. Innovations in stablecoins and AI-powered blockchain solutions will play a pivotal role in enhancing user engagement and expanding the utility of blockchain technology. 5. Evolving regulatory landscape. The anticipated repeal of SEC's SAB 121 in 2025 is expected to create a more favorable environment for digital asset custodians. As regulations evolve, institutions will adapt their interactions with blockchain technologies, potentially leading to accelerated mainstream adoption. This regulatory clarity will foster innovation and investment in blockchain solutions. 6. Cultural shifts towards blockchain. The integration of blockchain technology across various industries will foster partnerships between sports teams and blockchain firms, enhancing fan engagement through loyalty programs and digital assets. This trend reflects a broader acceptance of digital tokens in everyday experiences, paving the way for mainstream adoption. Differentiating factors. While the transformative potential of blockchain is widely acknowledged, emphasis varies across sectors. The gaming sector's rapid growth is highlighted more prominently by certain industry experts, while others focus on supply chain efficiencies. Additionally, the pace of regulatory evolution is perceived differently, influencing how quickly institutions can adapt to these changes. Future timeline. 2022. Over $4 billion invested in Web3 gaming, signaling future growth. 2024, convergence of AI and blockchain technologies expected. 2025, anticipated 50% increase in blockchain adoption, major advancements in gaming and DeFi, and regulatory changes like the repeal of SAB 121. Q2 2028. The culmination of these trends will redefine the operational landscape of gaming, DeFi, and supply chains, intensifying competition from Ethereum and Avalanche. Conclusion. The projected rise in blockchain adoption is set to reshape the gaming, DeFi, and supply chain sectors by 2028. This transformation will be driven by technological advancements, evolving regulations, and a growing emphasis on user experience and utility. As these sectors integrate blockchain technology, we can expect not only enhanced efficiency and transparency but also new economic models that redefine how users engage with digital assets and services.